ability and research, which I'm sure you'll all be interested in because it has the word tax in. We are called that. We're essentially a corporate research and tax research outfit that works predominantly with the union movement. We don't have the word union in our name so that we can try and talk to audiences that the union movement can't necessarily talk to. But we try and provide some analysis on companies that unions are in bargaining with or that are engaged in various other forms of union activity and try and put some more information out there that the unions might not necessarily have the research capacity to be able to drive and get into. I'm going to talk to you about a recent report that we published on Uber, which is, well, I guess everyone's favorite company to hate in this country at the moment, or one of them. There's a good long list. And this report's called The Business of Misclassification, and it's in the context of litigation that was taking place from, well, we'll get into that in a second. I'm not going to go through everything in the report in huge detail, but hopefully this gives you a flavor of what's in there, and then you can go and have a look for yourself if you're interested. So how are we going here? Okay, so I'm going to start with in 2022, when The Guardian published a series of documents called the Uber Files, which they dubbed as a global investigation revealing how Uber broke the law, duped police and regulators, and most importantly for our purposes, secretly lobbied governments across the world. So this was a bunch of documents that had been released by a former Uber executive from the period of 2014 to 2017. There's lots and lots of spicy stuff in the Uber files. This is from when they were trying to illegally enter the Australian market. There's a presentation to managers in Las Vegas saying, regulator very grumpy, yet modest level of enforcement. I think this kind of represents the Silicon Valley model of move fast, break things, let the law catch up to where you're at. After the publication of the Uber files the next day, an Uber representative published another article in The Guardian saying that was then and this is now. Uber doesn't do that anymore. We've moved from an era of confrontation to one of collaboration. We love to work with the labor unions and the taxi companies now. So Uber was a different company, as we could all see. Unfortunately, not everyone got that message, and this seemed very much at odds with the New Zealand experience. And you might recognize this picture. It's from outside the Supreme Court here in Aotearoa. We've had some quite long-running employment litigation in which a group of 4 Uber drivers took a case where they were challenging their employment status. They believed that under New Zealand law, they should be classified as employees and that other workers in the sector, as well as them, should be able to enjoy the benefits of employee status and all the rights that come along with that, as opposed to the lack of benefits that you get from being a contractor. They won at the employment court, and that decision was affirmed at the Court of Appeal, but the company appealed to the Supreme Court. At the same time as this litigation has been ongoing, we've been seeing growing evidence that Uber has been lobbying the New Zealand government. Records show that on May Day 2024, that the Workplace Relations and Safety Minister, Brooke Van Velden, met with Uber, where they set out their objectives in terms of what they wanted to see for contractor law reform. And crucially, that involved what they called the contractor gateway test, which has now basically made its way into the draft text of the Employment Relations Amendment Bill. That bill was introduced into the House on the 17th of June this year, and it's, I think, select committee hearings are ongoing at the moment. There's also another set of lobbying that I haven't gone into much detail that Uber has been quietly involved in around the digital services tax. And we know that around budget time this year that the government all of a sudden decided it was going to drop the digital services tax, which I'm sure Uber were very happy about. So since Uber is in this position of actively lobbying in the New Zealand political process, I thought it was worthwhile taking a moment to think about what the economic benefits of having Uber in your country are. So let's take a look at the scope of Uber. Let's zoom out for a second. Uber is now the second, or Uber is by far the largest company in what we call the rideshare or the ride-hailing market. That's almost replaced the taxi market, the traditional taxi market. Many of the large taxi firms that used to exist have pretty much disappeared now. Wellington Combined Taxis went into administration in August 2024 as a good example, and they cited the expansion of Uber and the rideshare model as a big threat to their ability to do business. They're also the largest player in the food delivery market in the country, which is much more fragmented than that rideshare market. They're big enough to sponsor the All Blacks and the Black Ferns at the same time. Yet suspiciously, in the year of 2023, which is the last year for which we have financial statements, they paid a grand total of, well, 600,000 for the rideshare, and this is their income tax expense, 600,000 for the rideshare side of the business, and another 600,000 for the delivery side of the business. So a grand total of $1.2 million in taxes for a company that's fundamentally transformed the private transport market and many other subsectors. Seemed a little bit on the small side, suspiciously small for a company of that scale and impact. So we looked a little bit further. This is basically the financial statements of Razier, which is the rideshare side of the business. And you can see that this top line here of numbers is the revenue that they earned in the respective years. Again, 2023 being the latest year, we have financial statements. 110 million. I mean, it's a lot of money for us. If we had 110 million, I'm sure we'd be laughing the way to the bank. But in the context of how significant an impact Uber has had, it seems a little bit small. Interestingly, these costs seem to involve none of the actual costs, or sorry, the financial statements involve none of the actual costs of delivering the service. The vast majority of revenue is taken up by what they call intercompany service fees. The next largest is kind of the business costs, advertising, marketing, legal and professional and finance costs. And then there's a small domestic taxable profit down the bottom here, $2.2 million. But there is no record of driver remuneration. There's no record of fuel costs. None of the other costs involved with running a private transport business. Makes you start to wonder what's actually happening here. Why is none of the business costs on their financial statements? What is the revenue that Uber earns? This is from the 10K, which is the parent company's annual report. And they indicate that actually their revenue is quite different from what we understand. And this is kind of the reason for the title of the report. The revenue that Uber earns is not the fare that you pay, it's a service fee paid by drivers. The misclassification that I was referring to runs right through the Uber business model. Not only is the employment relationship misclassified, where the workers should think they should be employees rather than contractors, but the business transaction itself is completely misclassified. This is from their New Zealand financial statements. They say the end users, so people that take an Uber or hop in an Uber, are not our customers. Our customers are the drivers. So, which seems very, very backwards, but essentially what they're saying is that the revenue that we earn is a cut that the drivers take from the transaction. Our relationship is only with the drivers. We have no relationship with the people that take the rides themselves or get the deliveries. And as a result of that, the revenue is a very small proportion of the total amount of the transactions themselves. In other words, they misclassify the business transaction, and this has the effect of misclassifying their revenue, and as a result, misclassifying the profit that they earn, which is the thing that they tax, or that we tax. So it's quite important in making sure that all the services that we rely on to take an Uber, like a decent health system, infrastructure, and these kind of things, have sufficient funding. Uber says it strives to keep its service fee to 25% worldwide, but they've failed to do that in New Zealand. The service fee is 28% here. So because there's no real competitors in the market, they take a slightly larger cut. So we're going to now look at the parent company reports, Uber Technologies Incorporated, to get a sense of what the implications of the misclassification model is. Uber says that their service fee in 2024 reached a grand total of 44 billion US dollars, which is a large amount of money, but again, in the context of a firm that's completely transformed the private transport market and basically every consumer market on the planet, seems a little on the small side. They also are pretty consistently, they don't generate profits. And part of this, the profit is so low because their revenue is so low. Because if their revenue was recognized at the level at which of taking the fare itself rather than just the service fee, then the profit would be a lot higher. But one of the benefits of them being quite a consistently loss-making company is that they're able to those losses are able to be generated as tax assets, and they can use those tax assets to offset future liabilities. It's a method called loss carry forward that maybe your accountant knows very well. The the US filings also have another set of numbers in there, which is called gross bookings. They don't call it gross booking revenue, but it is, in fact, the revenue measure if the transaction was understood in the same way that we understand that transaction. And that the revenue that they earned in 2024 was, somewhere in the order of 4 times the size of the service fee revenue, that which they actually report in their financial statements. I did an analysis to try and work out what this meant for the New Zealand filings. The end result that I was able to come to was that my estimate was that rather than being a sort of $200 or $300 million company, Uber is a $900 million company, or their revenue in 2023 was close to $900 million. This means that they're similar in size to Transpower, the national grid operator. Um, yeah, I can't think of any of the other comparator companies, but a very, very large company that they earn $200 million a year in 2023 in intercompany service fees. This is across both Razier, which is the rideshare side of the business, and Portier, but only pay $1.2 million in tax. So the big question is, where do my intercompany service fees go after they get paid? There's no requirement under New Zealand law to detail where the intercompany service fees or related party transactions go. So we don't clearly have an answer for that information, but I think, I think we've worked it out. So in 2019, Uber was trying to list on the New York Stock Exchange. At the time, its intellectual property was held in this beautiful country of Bermuda. And they engineered an amazing transaction that, well, let's get into it. They valued their intellectual property at 36 billion, and they sold that intellectual property from their Bermudan subsidiary to their Dutch or Netherlands subsidiary. They financed that with a $20 billion loan from a Singapore subsidiary. So what happens is that the service fee income that when you take an Uber, which Uber classifies as basically its revenue, is sent to the Netherlands subsidiary. And the finance cost, those service fees end up paying off the finance cost on the loan, shifting that revenue to Singapore, which means that Uber is able to keep all the revenue within its subsidiaries, but is basically able to shift all of those profits away from locations where they could be subject to the tax system or have to pay any tax. This system was pretty widely reported at the time as Uber's tax shelter. There was a pretty good write-up on it in Bloomberg, and a bunch of business publications. And for a couple of years, this was the way Uber's tax arrangements worked. But things have changed recently, and this is kind of one of the interesting areas of the report. As a result of Trump-era tax reforms, which encouraged US firms to shift their intellectual property assets back to the US, Uber ended up shifting its intellectual property assets into a Delaware intellectual property holding company. And we can see in the company's records that there's a bunch of change of ownerships. You can see, look, there's 4 ownership changes that take place within a 10-minute period in 2023, and there's subsequent ownership changes that have taken place since. But as a result of that, the New Zealand subsidiaries of Uber are all owned by Delaware intellectual property holding companies in this building here called 1209 North Orange Street, Wilmington. This is a building called the Corporations Trust Center and is home to some tens of thousands of large multinational companies, all with very limited visibility on their financials. So it seems that now the service fees, that what Uber calls its revenue from when you take an Uber or get a delivery to your house, end up in one of the filing cabinets inside this building. However, and this is kind of the interesting twist that hasn't been in the public discussion so far, at the time that I was doing the research for this report, um, I was concerned that Uber was very close to the date at which it was going to have to do its 2024 filings to submit those to the company's register. The reason I was concerned is because it meant that I would have to change some of the numbers and redo all the formatting and all that kind of thing. But that day never came. And I've been checking the company's register every couple of days to see if the reporting entities have reported financial statements, and it has never happened. And we are well past now the legal filing dates that Uber is required or that companies are required to. So it indicates to us that there has been some kind of a change in the structure of Uber's New Zealand operations, such that it is likely that Uber no longer is reporting any revenue being earned here in New Zealand. So we now have zero visibility over tax payments made by this multinational company, which in 2024 we can assume is up to the $1 billion mark, given the size of it in 2023. And I think there's going to be some interesting work that's published by Tax Justice Aotearoa in the next couple of weeks or months that kind of digs down into some of the broader schemes that enable that kind of behavior. So keep a lookout for that. And that's basically all I was going to share with you guys. More than happy to take questions or hand it back to the chairs to.
Yeah, we've got nominally 3 minutes, but I'm sure people would be keen to stick around a little bit longer and ask some questions, so we could let it run for a little bit if people have got questions. That's really, really interesting, Ed. And as you rightly say, we are going to be doing a release of our own, hopefully next week, but we'll have to see if everything lines up to enable us to do that. Yeah, so any questions? Paul, you're on mute. Yeah.
Said that's fascinating. Just a duh question, but don't the Uber drivers themselves pay tax on then if on their income if the company isn't paying tax? How does that affect the whole calculation?
Yeah, you're right. They drivers themselves pay tax. And there was another kind of complicating factor to the analysis that I didn't bother to mention in here, but Uber was previously kind of outside or Uber rides were outside the remit of the GST system as well. That has now changed. So drivers are suspicious that the GST that's collected by the company is more than the total amount of GST that they're supposed to, and that the company is kind of skimming a little bit off the top. It's very unclear. I mean, I've been digging into the company for quite some time now and found it very difficult to get even a small modicum of information. So in terms of being able to answer if the GST settings are at the right level, or, I mean, you're right that the drivers themselves are paying probably much more well, definitely much more in income tax, personal income tax than the company is in corporate income tax. And I think all of those questions are important for the question of, how do we think about the digital economy? And I think it's the comparison that I draw is like decades ago, we had a big potential hole in our tax system around capital gains on residential housing. And because we didn't regulate that big hole in our tax system, then our economy has kind of adapted to follow that as the core part of revenue creation or wealth creation for most people. So if we don't get our hands or our heads around effectively regulating the digital economy problem, then more and more of the economy is going to restructure to be digital companies that are able to evade the tax system in a way that working people just simply aren't able to do.
Thanks, Ed. Louise.
Well, thanks. That's really amazing and absolutely impossible for many people really to understand, including, ourselves. The technicalities of all of that is really complicated. I just wondered, has New Zealand or comparable countries and with comparable issues raised these exact issues with in that internal inland revenue?
I mean, I'm not entirely sure. And for other countries, I guess the best comparator that we can look to is across the ditch, or across the Tasman in Australia, where the ATO is kind of more muscular in its enforcement, but also has more tools available for its enforcement. One of the kind of most effective tools that they have is the diverted profit tax tool, and the real benefit of that is that it requires a bunch of the companies that in New Zealand don't have to report their financial results, so the Netflix and now it appears the Ubers, to report. The problem is that they report kind of they just explain the scheme to us, right? So if you look at Netflix's filing, Netflix, for example, doesn't have filings here in New Zealand, but if you look at Netflix filings in Australia, they just kind of explain the same thing as what the current Uber filings are, which is 90% of the revenue gets sucked off and into company service fees and sent elsewhere. I think we need to really work as closely as possible as we can with the ATO, because they are leading the charge to make sure large multinationals pay tax. I mean, yes, Australia has a 30% corporate tax rate. They have a bunch of taxes that we don't, but corporate tax still makes up a larger proportion of their total budget than it does here. So they're the ones that we should be tying our wagon to as closely as possible. And I don't think that's an impossible thing for left-right thinking as well. I think right-wing governments could be just as effectively kind of linked into that if we have the right kind of framing around those discussions. I pay my taxes, so should big, large digital multinational company.
Thank you.
Thanks, Ed. And we'll take one last question from Mike.
Yeah, I'm just looking at a press report from the Independent in London saying it just mentions that Uber had initiated the legal challenge following a 2021 Supreme Court ruling that classified its own drivers as workers, which had significant implications for its tax and other obligations. So I'm just asking, really, do you have contact with that with the unions in the UK or the Tax Justice there at all, Ed?
Yeah, so it's First Union, which I used to work for, which is the union that represents Uber drivers here in Aotearoa, and they have quite good membership now, like in the thousands, which is great because it's a very difficult group of drivers to organize. They do have relationships with that union. I can't remember. There's a couple of unions in the UK. I think GMB is one of them, but there was kind of a much more organic driver union. There is some criticism of the Supreme Court decision in the UK, because in the UK they have a kind of in-between category that sits between employees and contractors, which is a worker category. So that is what the independent report is referring to. And that has a subcomplement of rights. And I can't remember if the right to collective bargaining is in there. I think it is part of the framework, but only on a certain number of those rights as well. So it is an improvement on the previous position, but I think First Union here was quite cautious to not want to go down that track to try and push for full kind of employee status, so as to make sure that the full benefit of employment was possible. And it's quite likely that that will be the outcome of the Supreme Court case. I mean, I spoke to the lawyers after, and I think they were less confident than before the case, that they were going to win. But it could go either way at this point, which is fantastic. I mean, there's a strong potential that we could have a world leading decision that comes out of the Supreme Court case, and then that would have flow on implications for how the company reports its revenue as well, or we hope it will. So yeah. And I do have close relationships with Tax Watch UK as well, which is more about anyway, yes, yeah, we're in touch with him.
Thanks, and I'll bend my own rules. Nick's got